Hello, this is Steve Sanangelo of the SRS Rocker Report, and I'm glad you're joining me today because I'm going to discuss the gold and silver prices, and are we going to see a continued breakout in the precious metals this summer, or is a correction ahead? Now, I believe the charts in this video update are going to give us an idea of what the precious metal prices have doing and what we could see in the next few months. However, over the longer term, we're still going to see much higher gold and silver prices because of what's happening with the Fed and central banks and the overall economy. All right, let me get started. And before I get going, I want to make sure everybody knows that even though I'm showing some of these technical levels of the gold and silver prices, I'm first going to start with silver. It's the fundamentals are the underlying cause of the price drivers of the precious metals. However, when they reach a certain key level or a certain technical level and they surpass that, then what happens, it becomes a spotlight to traders, investors, hedge funds, and institutions. And so when the silver price breaks out of a certain level, it becomes more interested to a lot of people, and that's when we start seeing more trading and more volume. Now, as I mentioned in my last video, silver broke out of this symmetrical triangle, and it broke upwards. And that was very important for it to do that. And as we can see, it was correlating in that. And so when it finally broke up, it did it it did a dollar in a very short period of time. And then this next level where it needed to break above is the 50-month moving average. It's 1626. It shows it also right here. Again, this is a monthly chart, so all of these candlesticks represent a month of trading. Now in August, silver is trying to break through the next level, which is this important 1682 level, which is the 200-month moving average. And here we can see the price right here. Now, why is this 1682 level important? Well, I wrote about it in my last article, and this is a futures price chart from investing.com. And on Tuesday evening, when China was having trouble with its currency and was propping up the yuan, we saw some volatility in the currency markets in Asian trading, and this is Asian trading right here. So the silver price took off, and then right in the evening in Asian trading, we could see it came up to the 1682 level. And it bounced off it several times before correcting lower. But as we could see, it jumped up 25, 30 cents in a short period of time. Now, this next chart is when silver opened up in London and in early US trading. We could see right here, it tried to touch the 1682 level, and then it bounced off, corrected down to 1670, and then early in US trading, it tried to again go above it, and then when it finally did, we see the breakout. And that's what happens. Once silver broke above this 200-month moving average, then it became on the radar of investors, traders, hedge funds, and institutions. And as we could see, it shot up. Now, in the next chart, it shot up more than 40 cents in a very short period of time. And so we had a mini breakout on the intraday chart. Well, as it peaked, we see anytime there's a breakout, we normally have a correction. And there is no coincidence that silver corrected right back down to the 1682 level. Now, it doesn't have to do it all the time, but a lot of times that's what it does. It retests the level before moving higher. Now, I want to show you the silver ETF chart. Again, this is a monthly chart. And the reason why this silver ETF chart is important is because of the volume. Now, I don't know if the silver ETF has all the metal in its inventory. That's not the debate here. Rather, it's the interest by the paper buyers who are now the market movers of price. And if we look here, back in July, this is the July ticker, and then August. Now, silver broke above in July its 50-month moving average, but it did not break above the 50-month moving average for the SLV. That just happened this past week. And so in July, if we go back and look, we can see that the trading volume right here in July was 400 million shares were traded. We have to go back all the way to 2012 where there was that much volume traded. Even in 2016, when silver, the SLV went from the 13s up to 19, it was about 325 million shares. So we're seeing there's a lot more interest. Furthermore, if we look in August, almost 181 shares have traded in the SLV, and there's still 3 weeks left in the month. So I do believe, seeing that we're having a lot more volume now, there's a lot more interest in silver. This is very bullish going forward. Now, this table comes from Charts R Us, and it shows the changes in inventory in the silver depositories, ETFs, and funds exchanges across the world. Now we've got the COMEX here, and it shows their inventory, and then all these ETFs and different funds. Now, I don't know if all the silver is, as they published in their perspectives, is in these different exchanges and ETFs, but what is the more interesting thing is how much silver has gone into these counts. The SLV right here, iShares, 33 million ounces has supposedly moved into the SLV due to the huge increase in trading volume. And that's almost 10%. So there's 365 million ounces now supposedly in the SLV, but we can look at, in all of these, we have seen a 63 million ounce increase in the inventories. Again, it's not whether or not the metal is there. This increase means there's a lot more interest in silver, and we're starting to see that in the trading volume. Now, this next chart I want to show is the weekly chart of silver going back from 2014. Now, several months ago, I showed, when I started getting interested more in technical analysis and the different formations, silver was forming what is known as a falling wedge. And when you see a falling wedge, you think it's negative. Actually, it's not. It's bullish. Normally, when the price breaks out of a falling wedge, it goes upward. On the other hand, when there's a rising wedge going upward, that's usually bearish. When it breaks out, it normally breaks down. So silver broke above this, and right now this is the 1620 level, and this has been a major support and resistance level. When it fell below it, it's been a major resistance level. Silver has shot up above it, and I believe it reached 1720. Now, if we look over the last several years, this 17.5 range tends to be pretty good resistance. And also, silver is starting to become overbought. It could go up to 1750. It could even go higher. But if we look back in 2016, when silver broke through this level, it went up to 18, and then look what it did. It came back and corrected, just like I showed you in the futures charts. So we could see silver continue to move up, but it may come back down and correct to a lower level before moving higher. So what are those levels? Well, in my previous video, I showed that the two levels that are important are 1620. Now, this is a daily chart of silver. And as I mentioned before, the 1620 level right here was the support level. Once it broke above it, below it, I mean, we could see when it tried to move back above it again, this is where it tested it twice. So now silver has broke above it. It did retest it here. And I think at this point, traders thought we may come back down to this 1550 level, but then it shot up again. So going forward, it will be interesting to see what silver is going to do, but we also have to consider, a lot of my followers have been looking at the commercial short position for silver. Now, I want to educate some of the followers that even though the COMEX when we see these short positions, and these red bars are the commercial short positions. When these red bars get longer, then we're seeing a larger net short position, and that usually means the silver price is peaking, and then it declines. And as the price declines, then the commercial short positions are liquidated. Now, what's interesting here, we didn't see an increase this week in the commercial short position. It actually declined by 8,600 contracts. I was quite surprised to see that. I thought because the silver price had taken off higher, we would see an increase in the commercial net short position. But there's a reason for that. And the COT reports, they end on Tuesday. And so when it ended on Tuesday, it was August 30th, the price was 1656. Then we saw a little bit of a sell-off, and then the price moved back up. And the last recording date for that COT report was when the price was 1645. So we did see, let me go back, a reduction in the commercial net short position because the price of silver did correct a little bit. But I do believe, as I mentioned, over time, we're going to see a consolidation. So if you look at this, the silver price really only consolidated net about 10 cents. But we saw almost a 9,000 reduction in the commercial net short position. As time goes on, I think we're going to see that more and more. As the silver price moves up higher due to the fundamentals, we're going to see a lot more commercial net short positions liquidated. So we're not going to see a continuation where the price keeps getting hammered lower due to a higher commercial net short position. So I do believe the silver price is becoming a little bit overbought on the short term, as we see it in the commercial net short positions. However, it is important that silver did break above this symmetrical triangle. And now, once it gets above this 2150 level, I believe that would signify that silver is now in a new bull market. But we need to break above and stay above that 200-month moving average. And I'll talk about that more in upcoming videos. Now for the gold price broke out of an ascending triangle. And I mentioned about this in June. And we could see that when it broke above it, which was the 1360, this was a major resistance level. It went all the way up to, I believe it was $1,530. And on Friday, it closed on 1509. So this was your typical breakout once it comes out of this major resistance level. Now, if we look on the daily chart, we can see this happening on an intraday or a daily as in a long-term monthly chart. Gold finally broke above that ascending triangle and the 1360 level right here. As it broke above, it moved up to 1440 rather quickly. And then, like anything else, it becomes overbought. So it starts to consolidate. And we can see it try to retest it again, consolidates. And now we're starting to see another ascending triangle. Now, a lot of times these candlesticks aren't exact. They don't fit right into this ascending triangle formation. But we can see as the price continued to correct, it moved higher up on this ascending triangle, all in July. And then when it finally broke above that 1440, you see it shoot up another $80 in a short period of time. This is what these technical levels, this is what the traders, investors, hedge funds, and institutions are looking at. So now, when 1360 used to be the resistance level, if we look at the next chart, now 1360 becomes a new support level. So I believe this 1360 is going to hold. And right now, there's no coincidence that gold came right up to this 1525, let's say 1525 level, and that is where its next resistance is. We can see it from these wicks on these candlesticks right here. And now, so this next resistance line is this 1525, 1550 level. But we shouldn't be surprised if gold over the next month or so comes back and corrects even all the way down to this 1360. I'm not saying it will, but if you look here in the breakout in 2009, gold shot up above that 1000 level, and it went all the way up to above the 1200 level. Well, here we can see over the next 1, 2, 3 months, it came back and retested that 1000 level before moving higher. So all I'm saying is, we don't know exactly how the future is going to unfold, but we're starting to see gold becoming a little bit overbought, and it's hitting the next resistance level. If it doesn't break through it, we could see a correction back down to this level. And that shouldn't surprise us, because that's probably healthy as it was here when gold continued higher towards a new high of 1900. Now, what's interesting about gold, different than silver on the commercial net short position, we see that the commercials added 36,000 more net short position. It increased to, I believe now it's like at 330,000 net short positions. Now, there is a reason for that. Gold behaved a little bit different than silver. We see a little correction here, and on August 30th, gold was $1,441. But I'm sorry, on July 30th, it was $1,441. But on August 6th, it had increased $42 to $1,483. So we had some pretty big movements in the gold price. It was for that reason we had the increase in the gold net short position. But you see, I think we are in different territory, and this just came out today is Sunday, recording this video. I looked to Zero Hedge put out this new article. They tweeted it out. Everything has changed. Gold is at an all-time high now in 73 countries. Now, we have to be a little bit more patient for the US dollar because, as I mentioned, the Federal Reserve has a monopoly on the world's printing press. So it's going to take a little bit longer for gold to reach a new high in US dollars. But again, I did want to show this one more time. While gold has jumped up $250 in a short period of time, it has broken above this. It was the resistance level. It's now the support level at 1360. We've reached the first resistance line of 1525, 1550. If it does break above that, then the price could go even higher. We could see it go to 1600 or 1650 before correcting. But I wanted to show this also. This is the gold price. This is the weekly chart. Again, on a weekly scale, the gold price is very overbought. And we can see that how it shot up in a straight line here. It's at 1508 here on the weekly chart. So it seems to me that gold could go down to 1400. It may not go down all the way to 1360, but the 1400 seems to be a pretty good level if gold is going to correct, especially with the large commercial net short position. We shouldn't be surprised to see it go back down to 1400 or at the low at 1360. Now, I wanted to show this chart of Beyond Meat. It's a new, had its IPO in the beginning of May. It was listed for $25. At the end of July, it reached $240, almost 10 times its value. Right now, it's trading at $164.37. I picked this stock because Beyond Meat which is it's a company that's offering a meat substitute, and they're starting to market it in different supermarkets and grocery chains around the United States. And so this stock price is insane, but this what typifies the insanity taking place in the grand stock market casino. For this company to go from $25 to $240 in 3 months typifies what's happening in the mindset of investors. So I believe this is what the precious metal investor is fighting against, this kind of market insanity. However, we're starting to see light at the end of the tunnel. There's a lot of interest now moving into gold and silver due to the Fed lowering interest rates. We're starting to see volatility now in the currency markets. So I wanted to show you this Beyond Meat, where the precious metals are competing with. And if you look at this next slide, I think you'll like this next slide. Beyond Meat's competitors, according to CNBC, I looked at one of the charts, is Hormel. You know, they make the canned meats, different canned meats, and bacon and all that. And then we have Tyson Food. Now, if we look at the comparison of Beyond Meat to these other, and these, of course, these are very large companies, but I wanted to show you the insanity compared to the stock price compared to these other competitors. Now, Beyond Meat, their 12-month trailing total revenue is $165 million, but they've lost $33 million selling that $165 million of meat substitute. Now, what's interesting, their market cap is $9.9 billion, and their share price, as I showed you in the prior chart, is $164.37. The total workforce, according to LinkedIn, their LinkedIn page, is 261 workers. Now, if we look at Hormel, their total revenue last year was $9.5 billion. Their net income was $1 billion. That's pretty good. And their market cap is $22.3 billion. Not a little more than double of Beyond Meat. Their stock price is a quarter of what Beyond Meat stock price. It's $41.71. They employ 20,000 people. And then if we look at Tyson total revenues in 2018 were $40 billion. They made $3.3 billion in net income on that $40 billion. Their market cap is $26 billion, not quite 3 times of Beyond Meat, but their stock price is about half of what Beyond Meat is at $88.37, and they employ 121,000 employees. So if we compare the stock price of Beyond Meat, look at it's losing money, it's not really having a lot of sales compared to these other 2 giants. Why is its stock price $164? Well, the analysts are suggesting that's the stock price because of the growth. We're seeing a lot of growth. When you go from 0 to 165 million in sales, it looks like a lot of growth. But this is a typical company that I don't believe will be around for a long time. But this, again, is what we're facing, precious metal investors are facing in the market. To conclude, going forward, I do believe the precious metals are probably a little bit overbought on the short term. And right now, silver, it's important that silver breaks through this 200-month moving average shown in the red line. And when it finally does break above that, this is its first major resistance level right here, the 2150. When it breaks above that, I believe we are in a new bull market in silver, a very healthy bull market in silver. And for gold broke out of that 1360 level, which it's been under for 6 years. And now it hit its first resistance level at that 1525, 1550. If it does correct lower, we shouldn't be surprised because it is becoming a little bit overbought. We shouldn't be worried about that. That happened back in 2009 and 10 before gold moved up to new highs. So I'm just saying that if we see correction, it shouldn't be negative. It's a positive part of moving the price higher. But the gold price can continue higher. We just never know what's going to happen in geopolitics, what's going to happen in the currency markets. So I'm just warning you that I do believe, as traders look at these prices of the precious metals on a short-term basis, they're a little bit overbought. So we shouldn't be worried to see a correction over the next month or so. So I just wanted to thank you for watching this last update and trying to provide a pragmatic view of the short-term move in the precious metals. I am very glad to see that both gold and silver have broken out of their 6-year resistance and consolidation. I do believe we're going to see much higher gold and silver prices over the next year or two. So if it takes, it's going to take corrections along the way. And I thank you for joining me at the SRS Rock Report. If you haven't yet subscribed to the SRS Rock Report YouTube channel, please consider doing so. And I thank you very much.